The opinions expressed are those of the host. The material is for informational purposes only. It does not constitute investment advice, and it is not intended as an endorsement for any specific investment. Visit crestmontpw.com for more details.
This is Alec Walker with Crestmont Private Wealth, and you are listening to The Ascent. Today I'm joining you from Bernie Radio Studio, here to talk about the value of an advisor. And previously in an episode, actually the first episode that I'd recorded, we talked about the value of an advisor as it relates to fine dining, cooking, which is something that I'm passionate about. So today I wanted to take a slightly different spin on that and actually look at some hard data. And there was a study done by Vanguard, actually, originally as early as 2001 was the first study they did, putting the value of an advisor on. And then in 2014, they actually quantified what the value is of an advisor. And just some disclosures, this is not an endorsement of Vanguard. We do have some Vanguard funds within our portfolios and use some of their products, as well as other investment providers out there. But this is just a broad study on the industry. So some of the nomenclature I'll be using today, I'll use the terminology basis points. And simply put, basis points is a way to express a percentage. So 100 basis points in our world means 1%. And so what Vanguard did many years ago is they actually quantified that individuals working with an advisor through comprehensive financial planning, investment management, estate planning, wealth management can provide up to 300 basis points in value. So in a sense, that could mean exceeding 3% of net returns that an individual or family may not receive by not working with an advisor. So I wanted to kind of high level talk about what those different elements were, where those basis points, where those percentages are derived from, and how we kind of operate in those different levels. So what the key 8 areas are that provide this benefit above the baseline level is a suitable asset allocation, usually ETFs and mutual funds, investment selection, rebalancing, behavioral coaching, asset location, tax-efficient retirement income strategy, total return investing versus income investing, and tax loss harvesting. So a lot of different areas. And if you reach out to us, and you can contact me directly at alec@crestmontpw.com or visit us online at crestmontpw.com, we can share with you our client service offering that highlights kind of the key areas that we provide services to clients either on an ongoing, an annual, or an as-needed basis as it relates to financial planning, investment management, estate planning, and other services. But I wanted to talk about kind of some of the key areas here. So number one, let's talk about the top 3. Asset allocation, investment selection, and rebalancing. Those kind of encompass a lot of the investment side of things. So one thing that we do with our investment committee is we're looking at creating a portfolio of low-cost ETFs or institutional mutual funds. Our investment committee meets at least quarterly. Obviously, during more volatile times like we've gone through recently, that could be meeting daily or weekly to talk about what's going on in the markets. But what our committee does is we're reviewing our portfolios to make sure that if we chose this specific fund for this specific purpose, that they're still providing the need that we want at a reasonable price. And if we determine that a change needs to be made, we are making that change. Our clients have given us discretion, authority to make those certain changes on their behalf. We're making that change and relaying the decision to them. So that's number one, is selecting a broadly diversified portfolio. The ultimate investment selection is key. That can add up to 1% of value to clients as well. So making sure we're not adding investments that are going to provide a undue risk to return profile, that risk and return to match up accordingly. And then finally, rebalancing, making strategic rebalances at the appropriate time to bring a client's account back to target and making sure it's not drifting too far from that target allocation. Those are some keys there. Now, one of the larger areas of value that advisor can have in terms of basis points, so up to 200 basis points or more, so 2% or more, is behavioral coaching. And now behavioral coaching is a broad term there, but a lot of what that is, if you kind of think about it simply, is keeping clients in the seat, helping families, individuals not make that big mistake. And so when we talk about what we do partnering with clients through life's moments, collaborative financial planning and investment management. We're having these conversations with clients when the market is doing chaotic things, and we're helping coach them through those. We're maybe scheduling a meeting to bring them back to the plan, helping educate them on why we have certain investments in the portfolio. We're bringing them back to the purpose of their accounts and making sure that getting to know the client, that takes time. That's a big piece of the behavioral coaching. If we were to put you in a portfolio that doesn't suit your risk tolerance or profile, that's going to increase the likelihood of you abandoning the plan at the wrong time. But that takes time to really get to know a client, to really get to know what their risk appetite is. And that takes trust. And so over time, as we strengthen our relationships with our clients, that's why some of our clients have been with us for 10, 12 years, 15 years at this point. They really know us and we know them, and we know how to help manage them through these difficult situations. So again, that's why that piece can be so impactful, up to 2% per year in value. Think about selling when the market was down 15% this year, and then within a handful of days, I think we said this on a previous podcast, I went to lunch and the market was up 10%. If you think about the value of your portfolio, that 10% that happened over a 15-minute period in the market is real dollars. That is real return value. The next three are a bit more kind of asset location, tax related. Where do you have certain assets? We tend to maybe have our Roth IRAs for clients are going to be more aggressive. So when we're looking at their entire portfolio makeup, we're looking at the entire asset allocation, but that Roth IRA, that may be their most aggressive account. So having the right assets in the right locations are really important. That can be up to 60 basis points, 6.6% in return. A tax-efficient retirement income strategy, this is a big one. So, this is where when a client is no longer working, so that income goes away, and we always talk about this, well, that paycheck goes away, but you're starting to pay yourself from your portfolio, be it Social Security income, maybe you have other guaranteed pension income. But for most folks nowadays, as pensions become less and less common, it's you're turning on that paycheck, that valve from your portfolio. And so we really work with clients not only on a year-to-year basis, but maybe planning over the next 10 to 15 years, where are we going to pull from our portfolio to generate that income that we need in a tax-efficient manner? So that could be looking at non-retirement accounts, just regular brokerage accounts. It could be looking at making Roth conversions to minimize the future taxable income that you're going to generate from a required minimum distribution from your IRA account. And so that's a very, very dynamic strategy and process with each client that, according to Vanguard study, adds up to 100 basis points or more to a client's benefit. So again, that's 1% there. And then total return versus income investing. So a lot of folks, sometimes get hung up on the searching for dividend income. Oh, I want a security that's paying a good stream of dividend income. Well, there can be some reasons for that, but sometimes that can be suboptimal. Sometimes a company is paying a really strong dividend, but their value is decreasing over time. The total return of that investment, that stock, that company is underperforming kind of the broader market. And so we look at helping to educate those clients. And again, that's a tax decision as well. Dividends sometimes are less tax efficient than capital gains in certain areas. And then finally, the last kind of key point here on that Vanguard study is tax loss harvesting. That can add up to 150 basis points or more per year. And depending on the complexity of your situation, being able to harvest losses to minimize your capital gains while staying invested can be a really impactful decision to make. And so myself being more on the CFP side of things, I'm really interested in the tax planning things. So when we talk about our investment committee, Sam is the CFA, more of the technical investment side of things. I bring a little bit more of the tax planning when we're looking at our client's portfolio. Near the end of the year or throughout the year even, we were able to capitalize on some tax loss harvesting for clients' unique situations with some of the volatility that was going on in April of this year. So that's a really key area that we look at. So in sum, there's these 8 key areas that Vanguard has said can add up to 3% or even exceeding 3% in net returns to a client. So that's what we're really trying to do by collaborating and working with our clients. This is Alec Walker with Crestmont Private Wealth. Today we've been talking about the value of an advisor. Like I said, Vanguard did a study in 2014 that working with an advisor can add up to or even exceeding 3% to a client's value. If you have questions or would like a copy of that study, please reach out to us via info@crestmontpw.com. Just wanted to leave with a cooking story. As you know, I'm passionate about cooking. A good summer recipe that we just did at the house, a Lemony chicken piccata. It's a tip to use. In the past, I've put some lemon juice in the chicken and the sauce with capers, but if you thinly slice lemons, peels and all, and add it to your sauce, really enhances the flavor. So a hot Sunday and you're home and want to cook up a good recipe, highly recommend chicken piccata. Reach out to me if you have any questions on that. You're listening to The Ascent with Crestmont Private Wealth. I'm Alec Walker. Thanks for listening.